Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. We are making our way through this shortened week. Of course, we have the bank holiday on Friday, which means Thursday is the end of the quarter as we head into Good Friday. And it's been a mixed bag on volume. There's been a few things that we can definitely note so far this week. That volume has been spotty, depending upon the stock or the sector we're talking about, which actually, if you step back and think about the way in which end of quarter, if you're looking at end of quarter from a window dressing perspective, if you're looking at end of quarter from a rebalancing perspective, I mean, all those words basically mean certain things need to be shuffled around in order to maintain whatever the goal is of the fund of whatever monies are being managed. And generally, I'm going to take the tact of strength is going to get stronger at the end of a quarter and weakness is going to get weaker. So this is not the time to look for, say, symbols in the XLK like Microsoft or Apple to necessarily stage a massive rally. Although clearly they're not in a downtrend, they're certainly not as strong as stocks like Amazon, Meta, those kinds of names, Nvidia, right? Now, also the other thing we've got to keep in mind as we're going through to the end of the week is that Powell and the PCE are on Friday. So I'll be keeping a really close eye on what bond traders are doing going into the end of the day on Thursday. In other words, are they keeping the bond yields lower by rallying or at least supporting ZB and TLT and ZN and IEF? Are we seeing that support, or are we seeing weakness? Are we seeing those floors, those supports crumble? And that's not what we're seeing. We're seeing, for the most part, bond yields are accepting that June-July timeline to that first quarter point rate cut looks pretty darn imminent. And when you look at the data, it also looks pretty darn imminent. So when we take a look at the Fed Fund futures for June, here we go. There's your Fed Fund futures for June. You'll notice that we have a 63.8% probability for that rate cut, that quarter point rate cut. There's still a 30%, it's irritatingly visible, with still a 30% probability of a hold for June. Now, this is about as dovish as this has looked in quite a few weeks, because June was looking more as a pretty certain hold as May is, and that seems to be changing. So now, fast forward to July, now it's really a matter of, at this point in July, we will either get our first quarter point cut or our second quarter point cut. If you're someone looking at the next quarter, right? Here comes the end of March, and you're planning for your April, May, June, and you know that in June or July, by the 12th of June or by the 31st of July, we're going to have lower rates. How are you positioning? Are you positioning short bonds, expecting higher yields? No, it makes no sense, right? Are you positioning long defensives because there's going to be risk aversion? Maybe, but are you, for the most part, bullish equities as rates are coming down? And that's typically going to be what, I know that's how I've always played it. And I know that's how I've observed it's being played over the years with the different cycles of rate cuts. So maybe I need to go grab, we did an issue of Top Tier Outlook some time back, where long before the rate cut probability was getting certain, when it was just gelling, I said, hey, what could this look like? Because remember, if we're always forecasting as traders, investors, we're always thinking down the road, maybe around the corner, around the bend. If we're anticipating something, we start trading in anticipation of the thing, right? Whatever that event is. In this case, obviously two things. One, typically election years are not bearish, right? And forget that. We have, even more importantly, I get questions, Rog, how are you handling the election? The way I handle every uptrend, the way I handle every market structure that tends to punch up to higher highs and higher lows. This is a nice tailwind. How are you handling the dovish pivot? The same way I handle every uptrend. So it's not as if we're reinventing the process of buying these bullish events. We're just sticking with what has worked. We're just making sure, and here's the important part, we're making sure that we're identifying these uptrends in the best way possible, and that we're prioritizing the relative outperformers, right? Okay, so that is where we're at. Let's jump on over to the charts. Let's take a look at ZB. Let's take a look at GC. All my cards on the table. I do have, we have in the mastery a GC set up via GLD. Now, for those who thinking, Rob, I've always wanted to take advantage of some of these commodities like bonds, but I don't necessarily want to trade futures. If you trade futures, great. They're my first love. That's how I cut my teeth as a trader. However, I realize not everyone's a futures trader. Not everyone wants to deal with the initial margin requirements of futures or the leverage. They're highly leveraged instruments. And maybe some folks want to take baby steps into eventually being a futures trader. Awesome. Love that last choice. Embrace futures. There's a big part of what happens in equities based on what's happening at the top of the food chain in the indices and in the commodity futures. So that said, GLD is a great alternative for GC. And when you've got comfortable with GLD as sort of a proxy for GC, go to MGC, which is micro gold. So a lot of ways you can take these nice incremental risk conscious steps into an amazing market like commodities, but take your time getting there in terms of understanding its behavior. So we've got that long position in GC to kick off the morning, and we'll see how that's going to follow through here today. All right. So as always, gang, the best part of our show are your questions. Type them on in. We're going to be here till 20 past the hour, as we are every morning for, the past 3 years now. So thank you for being a part of the Charts and Coffee show. And let's go ahead and dive into some of the questions, and let's take a look at the indices while we're at it. Hey there, Nomo FOMO. Hey, I got some Nomo FOMO Gojo in the Giant Cup today. Is it okay? You know how they always say, if we're watching the NFL, they say the official sponsor, the official headphones of the NFL. Nomo FOMO is the official coffee of Florida HQ. Love it. Thanks for pointing the FedWatch tool to us years ago. Love it. I do. There's so many cool components. Yeah, thank you for bringing that up, Nomo. There are so many cool components to this particular, as I like to call it, the macro decoder ring, right? We don't have to get bogged down in all the minutia of the different data releases. We can just ask ourselves, how does it land here? How does it project based on people taking money and trading, right? This is not opinion. This is not some sentiment indicator. This is not some market internal. This is actually people taking money out of their wallets and buying or selling the futures contract. So it's things like this that, yeah, absolutely will get my attention. I appreciate that, Nomo. All right, mRNA. Sure. All right. So we'll start, as we always do, structure dictates strategy. And structure is largely bullish for really two reasons. And these are things that we do day in and day out, whether it's a 5-minute time frame, a weekly time frame, or the daily here on mRNA. First thing I'm going to note is that we are above the 200. Second thing that I'm going to note is that we do have, for the most part, whenever we do trend, it's longer periods of an uptrend rather than these very short periods of a downtrend. It's certainly not a great trend, because the the brevity of each market structure has been a little bit of an issue. But for the most part, I would treat this bullishly. And for now, my approach to something like this, if presented with, hey, you've got to trade mRNA, the closer we can get to 100, that would be the trigger for a long position. As far as, and I realize there's a lot of questions, well, what do we do now? Sometimes the answer, most of the time, the answer to what do we do now is nothing until XYZ is met. So yeah, until I get down to about 101 to 98, maybe 99, there's nothing for me to do. But I like the long side as long as we remain above the 200 and we don't turn back into a downtrend. All right. The words window dressing, do they mean pro money managers padding their portfolios so they don't get fired by their clients? I kind of look at it that way, but really what it is, I don't blame the money managers. By the way, for those who saying, Rog, it's kind of mean what you're implying. I'm not in any way saying what the people who manage money are doing is wrong. I'm actually making commentary on, frankly, the stupidity of clients forcing money managers to do this in the first place. So hear me out. I don't blame the people doing it. I blame the people who think it's meaningful. The level of education around people understanding what's happening with their money is abysmal, right? That's what I always say. I admire my folks in the Sector Secrets Master here in Charts and Coffee or the Top Tier Outlook show. Most people don't take the time to educate themselves. So in a lot of ways, what they're trying to do is put their best foot forward, right? That's the best way to do it. They're trying to put their best foot forward because frankly, their clients are going to come in and give them a hard time. I mean, look, I've got buddies in the business saying, you won't believe, Raghee, what my clients think I'm supposed to do for them. And I get it. And so no, it's not in any way really to say the money managers are at fault here. It's the clientele who think that people can see the future. Nobody can. And that risk management doesn't matter. It absolutely does. And that if they simply hold something, the cost basis doesn't matter. That's pretty common. So Anthony, all I'm saying is there's a psychology around strength getting stronger, weakness getting weaker. We see this most emphatically at the end of the year. Many of you noted that last year, 2023, when I said, look, this is not the time to bottom pick. And it wasn't, right? And it wasn't. And then, and I've got to give our very own Chris Brecher a shout out. He talks about these 50-50 funds. And when they tip the scales and they don't have enough exposure to long bonds, his theory, his observation is that they'll have to sell equities to buy bonds and equal out the 50-50 fund. And that's going to be another segment. And I'm sure there's another 2 or 3 scenarios by way of certain types of fund goals will dictate what they do at the end of the month. Hey, at the end of the month too, whether it's end of quarter or end of month, we also have redemptions. People like to pay themselves at the end of the month. So you've got redemptions that also come in most to emphasize, I'd say, the last 3 trading days of the month. So there's a lot of different things that we take a look at that would suggest there's a higher probability of certain types of behavior. The problem with any of this is we've got to be able to narrow it down. And that's where, regardless of whether we're looking at strength getting stronger or rebalancing, we have to understand where that is likely to hit. And that is where relative outperformance does make a big difference. So, in terms of, say, the pullback on Meta or the massive pullback on NVIDIA yesterday, in the video that I cut yesterday, if you haven't checked it out, it's at the Simpler Trading YouTube channel. And I think ultimately, when we see weakness, we have to step back and look at it within the context of the trend. And that's where I stepped it into, look, SMH, NVIDIA, those folks wanting to take advantage of the number one strength sector of the quarter, of the entire quarter. And I don't mean by a little, I mean by a lot. This is the absolute number one, outperforming, up 28.65% as we speak right now, followed by a distant second, right? Less than half of 12.29% up in the XLC. But SMH is not a place that I want to start picking a top, not at the end of a quarter. Now, as we go into the next quarter, if we're going to see sector rotation, we're going to look at different spots of this hierarchy to say, well, where could profit be taken and where could it be funneled into underperforming assets that have now an entire quarter to show their stuff, right? So that's a different conversation, but that starts really the beginning of April. So that's the way I look at that. All right. So thanks for the question. Thanks for the question, Anthony. All right. My thoughts on O. Okay. Oh. Realty Income Corp. Okay, I don't know much about this one. I do know it's below the 200. It's got good support around 51. Be careful because your upside target's going to be the 200 around 54. Ideally, we get back above that, but this it's a tricky one. It's on the bearish hemisphere. It's just most recently at the end of February shaken a downtrend. Had a quick downtrend again. Tough one. Look, here's my problem with a stock like O. And this is not just because of O. This is any stock that looks like O. This could be Apple too. If I look at a stock that is not participating in the uptrend that we have right now, what am I doing, right? Why would I trade Apple? It makes no sense to focus on longer term continuation on Apple. Why would I trade Tesla? It makes no sense to expect longer term upside continuation on Tesla. There are places where the upside continuation is far better. That's relative performance. I think a lot of traders think, well, if something's really been beaten down, it's going to play catch up. Not always. Sometimes there's a reason why something is not participating. So it's a philosophy. It's not a matter of right or wrong. I'm certainly not being that binary. It's not a matter of right or wrong. It's really a matter of continuation. It's a matter of follow through. It's a matter of, can I continue to play a stock? Because for the next days, few weeks, few months, it will keep going in that direction, offering me better return, right? Better return. So nothing wrong with that. That's the zone, but that's why it wouldn't end up on any of my charts. All right. Let's see here. JT asks, have I ever used Heikin-Ashi candles? I find they're far superior than regular candles to show the trend. JT, if you've been following the show for any length of time, you know I've been using my color-coded candles called grab candles for 30 years. So no, I don't use Heikin-Ashi candles. Are they great for showing a trend? Hey, if you're having great luck with it, fantastic. Fantastic. There are millions, it seems, of indicators out there. I use the ones that I know I have tested over years and that work for me. And so what we try to do with the candles that I use are try to have an instant understanding of momentum and trend and have, well, for me, a better footprint, because I do like the candlestick, the body of the candlestick. It's easier to see than a Western bar chart. Lots of different tools out there. If it worked, it'd be on my chart. If it worked for me, it would be on my chart. All right, next up is AMD. All right, we have a funny relationship to AMD. I have a very funny relationship to AMD this week. We had AMD. We did have an opportunity to scale out. Then it gapped down. Then it rallied. I will say, and when I put a trade on in the mastery, and by the way, when I talk about the trades we put on, the mastery trades are what I'm always referring to. So when I put a trade on in the Sector Secrets mastery, and we put this on with red grab candles, that was not a smart move on my part. I really should have. Hey, I'm happy to publicly say, Rog, you could have done that one better. I should have straight up bought SMH. It is a far superior trend to AMD. So this is where I'm going to take a little bit of my own medicine, Vin. Yes, we did trade AMD. Yes, we took a little bit of profit, but it was a very tough management, because after that, the remainder of the position was borderline at a minor loss, depending on where you were, or even a larger loss, depending on where you were. So it was sort of taking some money from Vegas, then giving some of it back. And it really wasn't a massive net loser, but kind of a waste of time and money. And this was my own trade that I'm actually picking apart. We've got to be able to pick apart our own trades and say we could have done it better. I could have done it far better. I could have gone with SMH. So my thoughts on AMD are just no. I think there are, I think, right? What I'm communicating to you is there are better places within SMH to find follow through. And it's going to be either a stock in an uptrend or the sector itself. It's going to be a stock that does not have red grab candles, right? So no AMD, no Intel. TSM would be a cool one to keep an eye on. So those are things that I get upset at myself when I bend my own rules, because it just doesn't give me a high probability trade, and I can't look at AMD as a high probability play. But I will say, in our Sector Secrets Mastery, the Lorna bot's really good at decoding AMD. Interestingly enough, AMD is kind of the DPMRs work really well with AMD, because when it hits a first or second standard deviation of the daily price movement range, it tends to be a pretty wild inflection point. And that's something that the Lorna bot has observed as we've used these tools for a little bit better than a year now in terms of studying AMD's behavior and how it reacts to the levels. All right, gang, as always, thank you so much for being here for Charts and Coffee. I will see you all tomorrow, same time, same station. Until then, we're winding down the week, and we're going to have, for sure, a lot of volatility between now and then as we wrap up the quarter. All right, heads up, risk management. I'll see you tomorrow. Be good to each other.